Okay, today is the 19th of August. It's a Monday here in Singapore. So let's go look at a pair that is currently showing weakness. Now, the pair I'm interested in right now is the Kiwi. So let's go look at the Kiwi pairs. Let's go look at Kiwi. Let's go look at Kiwi Yen. Okay, so that's where we are. Let's go look at the 4 hour first. So, okay, 4 hour. It's all downside on the Kiwi Yen. Let's go take a look at the daily as well. Okay, so the daily you have the downtrend, right? So let's say I just throw on some moving averages, just for fun, right? Throw on some moving averages like so. So now when you look at this, it also tells you that on a daily time frame, see this green, still the highlight here. It means that at any point, this can always go into that, right? So the tricky thing is we don't know when that's going to happen. Of course, if that happens and you get the next move down, then that's something to keep. But right now, it's actually gone pretty far already. It's gone pretty far already. So we're going to be very cautious about taking any sells. If there's any sells on this, we've got to, since we know this can happen anytime, let's go look at the low time frame and see if we can get in on any sells. This looks like a possible double bottom though. So I don't quite like that this has actually gone down and then pushed back up strong and broke this previous high. Can you see that? So which means this most likely, to me, I think this is going to go up there. That's what it looks like to me on the 1 hour. So then just move this moving average. So Kiwi Yen, even though on the higher time frame trend looks down, but would I be interested to sell this like here? Not really, because I think that this structure, even if this was to come down here, this structure, right? This piece is what I'm interested in. Even though, again, everything looks downside, it does not mean that I will not take the buy. Because at the end of the day, this could always be happening right here. Is it happening now? The thing is that I don't know, but I will just trade price action and time action the way I see it. So according to time factor, I do like the time factor. If it comes down and breaks up and makes sideways, I do like the buy. Now, I think that might be the confusing part about trading. It's downtrend, but yet I still will take the buy. But if you look here, if it came down like this, here you see, I'll still take the buy up there. At the end of the day, it's not the take profit target that I'm interested in. I'm more interested to know where my stop loss will be. So since I'm not interested in the sell, if it breaks this low, that means the idea is wrong, right? And knowing where the stop loss is more important than knowing where the take profit is. To know where to get out of a trade. The stop loss also will tell you what kind of lot size we should be placing on this trade. You see. So that's basically what I'm interested in. I'm interested in the buy. So I hope that it will come down one more time like this. Maybe people who are in early buys will be taken out. So that then when they get stopped out, market makers come in, they'll buy, and when this one goes up like this, make some kind of pullback. This is where here I'll try to get in. I want to go up, I want to go up there, I'll get out of trade. Because again, that can happen, right? So I'm trading the correction of the correction. So if this is the correction of that, I'm trying to trade the correction of the correction, basically. Right. Once this is the correction of this move. Once this correction has ended, this is the correction of that. But this correction has got its own correction here. So I'm treating the correction of the correction, if that makes sense. Right. So once the correction I think is finished, it's about to make its next move up, I'll take that buy. And what would make the idea wrong is, let's say this one goes down here, but it does not push out, does not make a sideways, then if it just pierces through, it means this trade idea is out, right? And then I'll probably not be the trade. And when would I be stopped out? Well, if it came down here, it pushed up, it came here, it went up here, then after I entered the trade anywhere here, depends on how I enter, depends on what price movement here is. If it goes up, breaks, stop will be over here. If it goes up around here and I entered here, stop will be over here. If it comes down and take me out, that means I'm stopped out here. So the reason I want to be stopped out is because you don't know how far this is going to go. Because it's on a downtrend, right? On the 4 hour. The other one that it's interesting to look at would be let's go look at all the Kiwis, pound Kiwi. So I'm focused on the Kiwi weakness. I think Kiwi is going to be quite weak. The Aussie is also kind of weak. Okay, but Kiwi is going to be weaker than the Aus. Okay, so let's go look at the Kiwi. So you can see a couple of stuff. Lines drawn. I'm going to remove all those lines. It's currently in the uptrend on the 1 hour. It's all upside. See that? It's all upside over here. So it was there, and then now it did this. Let's see. So this one, what you're interested in is a slow crawl to the upside. So if you look at this, right, I'm very interested in the slow crawl to the upside. So if this one happens to go, that could just go, all right. But also, well, this could always come down here like this, and then form the same thing, and then goes, and then this one happens to go. So if you decide to take this buy, then you're going to be stopped out. If it comes and forms some push the upside again, then again you can take the buy, right? So basically the idea is if you see anything that forms that looks upside and breaks, then you're looking for the buy, because this is all Kiwi weakness. Basically, you're looking for anything that has weakness on the Kiwi. Kiwi Swiss. Let's go look at it. So 3 pairs. Let's see how they correlate with each other. So this is also the 1 hour. We have a little crossover here. See that? It's a crossover here. See all these look like double bottoms. They look like double bottoms. Let me go to the 4 hour, see what we got there. Yeah, see, I don't like it. I don't like the sell. This looks like a buy to me. All these can always come up to anywhere like this level easily. Or you go up even higher. See all these levels over here. How it gets there is another thing. You can always go do this and go up, or it just shoots up straight here and then shoots up. So there are many ways, but right now what we're interested in is in the entry. So since our bias is to the upside, we've got to figure out how to enter this. So let me just see if there's any way. Okay. Let's see what this is. 1, 2, 3. Stuff like that. It could make an unfortunate crawl. The easy one would be, of course, this, then this, and then up. This is the easy one. But the difficult one, which would be, let me see. The difficult one would be. Let me see. 1, 2. Point 2. Okay. Okay, what I would like to see is something like this, something like that. Yeah, this is what I see. At least come to pull back to around this level. That would be best. Something like this. See, this 8, 6, anywhere around here. These are good levels. The longer it stays sideways, the higher the probability this is going to go up. So again, Kiwi Swiss upside. So I would say anywhere like these levels here, or even this level over here. 477. Let me see. So this level over here. Yeah, see that? These are all good levels to buy. Now, I don't recommend putting in big lots, because if you go in big lots, that usually means you're in and out fast. But whenever you go for a swing trade, looking for price action to get from here to there, this could always come here. It could always bounce like this. It's supposed to go, but then suddenly it collapses to this level. Then this one This one is the one that goes. So in swing trading, it's always good to accumulate lots rather than put down a huge lot and then hope that it just flies up in the direction that we want, right? So it's always good to accumulate slowly. I think that's a very good practice, especially for swing trading the higher time frames like 4 hour and daily, right? Um, so yeah, that's the thing. Kiwi weakness today. All right, that's all. And make sure you have a trading strategy in place. Okay, the one that I use is the capital forex entry system formula. So make sure you have your own to measure and calculate all the risk before you actually take any trades. Right? Okay, take care and trade safe.